We're now 6 months into our financial meltdown, and the people who are supposed to be able to tell us what's wrong still seem to be taking stabs in the dark.
Well, originally we were told that it was a banking problem and that TARP, which is short for Troubled Assets Relief Program, would cure it. Well, this morning the Buckler Report goes back to see how it's doing.
The home of the brave and the land of the free is quickly becoming a bit less bullish on those ideas when it comes to fixing the banking world.
Nationalization may be the way we need to go, which means nuking the shareholders, stripping out the bad assets, and starting over, selling it back into the market. It's not.
Ed Cohn is no radical. He's a journalist who has worked as a writer and editor for years at Forbes, not exactly the home of socialism.
The idea is not for the United States government to take over banks permanently or to take over all banks. It's to take over banks that are in deep trouble, that are insolvent, fix them, and sell them back into the market. The FDIC does it to banks almost every Friday afternoon. What makes it so remarkable, what makes it different from your usual Friday afternoon taking over some little bank in Georgia, is we're talking about the biggest financial companies in the United States.
That's where this whole thing seems so upside down to so many people. In much of American life, bigger means better. Better able to take a hit, to withstand a down cycle. But in this case, the bigger banks not only can't withstand this down cycle, they help create it. And that's where smaller banks like the Bank of Oak Ridge come in.
The difference between Bank of Oak Ridge and let's just call it some of the other banks, we're still very profitable. The banks, especially the large banks who have gone through such a turmoil, they've lost money. So they've got to stop the bleeding, so to speak, of losing capital or losing earnings before they can start applying large sums of those back out into the world.
Despite being profitable, the Bank of Oak Ridge took some TARP money because it saw a chance to use it to pump $77 million back into the triad economy.
These are all our customers. They're all our builders.
Main Street projects, as Ron Black calls them. Bank of Oak Ridge isn't alone. Many community banks, which have a smaller, more limited mission, didn't get into the credit default swaps that are now sinking the bigger banks.
Too many people got too comfortable with too much risk. And you can start from the consumer, a consumer signing documents that they don't understand, taking loans that they don't understand.
And Ed Cohn admits bailing those people out has a serious downside.
You have moral hazard, which is introducing the idea that risk is not really that risky. What we've had is what some folks call lemon socialism. It's not real socialism where the government takes things over. It's where the government just props up the lemons and risk is socialized, but the profits are privatized. That's not capitalism.
But that's what our capital appears to be giving us. Bob Buckley, Fox 8 News.